Viewers, India is back. That's the unanimous verdict. Strong manufacturing performance, corporate sector earnings, zooming equity markets and agricultural sector output has led to many rating agencies revising their growth estimates for the Indian economy. Over the next 30 minutes, we will speak to the most influential economists and get them to ask some basic questions. What has triggered or is triggering the economic recovery? Is recovery based on strong fundamentals? How widespread is the economic resurgence? And is the worst now well and truly behind us? And what if, and there must be, concerns and challenges? What are some of these concerns and challenges that we need to address and perhaps anticipate? Let's open this up, viewers. We are joined by Amitabh Kant, CEO of NITI Aayog. Also with us, Surjit, Bhalla, Executive Director, IMF for India, Bangladesh, Bhutan and Sri Lanka. And of course, Arvind, Panagariya, former VC of the NITI Aayog, joining us from New York. Now, I want to begin first with you, Mr. Amitabh Kant, and I want to ask you the most basic of all questions. Why is there optimism around the performance of the Indian economy? What has triggered it?
So let me first say that high-frequency data is suggesting a robust recovery. For instance, the Manufacturing Purchasing Managers Index, the PMI, has been in the expansionary zone in this fiscal. We've also seen the government revenues have picked up, reflecting the increased demand in the economy. GST revenues have touched 1.3 lakh crores in October 21, which is about substantially 24% higher than last year and 36% higher than the previous year. Then I think the most important point is that exports have emerged as an engine of growth. The merchandise exports have grown very substantially, and this indicates that the growth in exports is not just due to the base effect. Rather, this growth in exports reflects India's increasing competitiveness and a global economic recovery. The next point I want to make is that the foreign direct investment inflows reflect the confidence in the Indian economy. This year, the FDI has grown worth about 81 billion, the highest ever level seen between April to June. Also, the flows have been very, very robust. And I see signs of recovery in the residential real estate. Rural demand is also picking up following a good monsoon. And overall, I think the domestic capital expenditure cycle is pointing towards expansion as well. So overall, as many analysts have shown, that the Indian economy is on a good recovery path. And as the IMF has said, India is projected to grow at about 9.5% in 21-22, a sharp rebound from the previous year.
Are you at all surprised, Surjit, Bhalla, because there were many people before the budget and perhaps a little after the budget that were disappointed that India hadn't thrown more money into the economy? The government hadn't thrown more money into the economy, especially after the COVID outbreak, and they said that this will prove catastrophic. Now, that obviously has not happened, and we've kind of bucked the global trend. The UK is dealing with the specter of inflation, and of course, so is the United States. They threw a lot of money. So we took a very different view of the entire problem.
Look, part of the problem has been with the commentators and the critics is that they were too hasty to come to a conclusion looking at the fiscal deficit. And at that time, it was by these people thought to be that higher the fiscal deficit, higher the recovery. Well, what has happened in India, and now there is research coming out to show that fiscal deficits, expansionary fiscal deficits didn't really help that much with growth, and also may have aggravated inflation. I don't want to dwell on the inflation part too long, but let me come to the growth part. What we did in India was not only did we control the fiscal deficit, but we made sure through food subsidies, through increased allocation of food, that the poor were not affected too adversely. This was a major accomplishment compared to many other countries. So basically, if the poverty estimates that we make are all based on what the GDP growth has been, rather than what is the extra incomes of the poor. They faced a downtrend with downturn in the economy, but they faced an uptrend. And my calculations show that basically poverty in India was not adversely affected, especially extreme poverty. So that is the one area. Then we have that basically we did significant reforms. It has all been said that don't waste a crisis, etc. Very few countries followed the principle of not wasting a crisis. Not only very few countries followed, amongst the countries that did do reforms, our economic reforms were the most extensive by far. So I think we concentrated on what was needed, what was necessary, and what basically benefited the most, the bottom 50% of the population. And last point, whether you look at exports, whether you look at tax revenue, GST, indirect tax revenue, or direct tax revenue, all of them are up about 20 to 30 to 35% above the same time period in 2019. So this is one of the most remarkable recoveries in the world, and it's for that reason that I think the IMF's estimate will turn out to be too pessimistic, but nevertheless, we are going to be the fastest growing economy this year and next year, and in my view, well beyond next year.
Mr. Panagariya, it's interesting to hear Surjit Bhalla suggest that a lot of that pessimism was perhaps misplaced. It might have also been misconceived, and there might have been motive behind it. I'm not getting into that. We are not turning this political. But Mr. Panagariya, obviously intuitive, commonsensical economic wisdom would have suggested that you should put in more money, put money in the hands of people, and you'll be out of the woods. But we didn't follow that path. And I think one of your articles, as well as Mr. Bhalla's articles that I was sort of reading, and of course we've had conversations, advocated actually against it. Now, that was a big point, counterpoint to argue, and you sort of risked your reputations. Now, explain to me why you were so conservative.
This was really not rocket science, Rahul. From the beginning, it was very clear to me that COVID shock was not just a demand shock. It was also a big supply shock. I mean, in a way, you think of an earthquake, for example, which is a supply shock largely. You can give people a lot of money, but if there is no supplies out there, how is that increased income going to translate into effective demand? It will not. And that was the logic behind my advocacy, at least from the very beginning, that demand expansion by itself is not going to deliver. And the government actually was very, very wise, also very courageous, I should say, because, it required courage in that atmosphere to stick to its guns and effectively focus actually the demand side of it only on the provision of food and shelter. Like, those are the two things on which the government focused, and that I think was a very wise decision. And in retrospect, it has come out very clearly that most of the stimulus that got given in countries like the United States and many European countries translated into increased savings, which now, as they are being spent now, is translating into higher inflation. So this was no surprise to me, nor is the recovery that is underway currently a surprise to me. I'd always maintained that the fundamentals were strong. As long as we can control the epidemic or the pandemic, I think we'll be in good shape. I still want to be careful that we are not out of the completely out of the woods on COVID, and we need to remain very, very careful. Good progress has been made. Obviously, fantastic progress has been made in vaccination, but we also need to be sure that people don't drop their masks and all, which seems to be happening. This is what we did earlier, actually, in 2021, and that led to the rather second massive wave. So we want to minimize that. As long as we can do that, I have no doubt that the economy will recover. And I hope we can talk about longer term growth prospects, which I think are absolutely excellent. But I'll leave that to our discussion as we proceed.
Yeah, we will definitely touch upon that. Let me come back to you, Mr. Kant. The government resisted pressures. Now, it could have been it's easy. It's very easy to get swept away by the populist demands, because the government, would have thought that there would be a lot of goodwill accruing to it at a time when a lot of people were perhaps, contemplating their futures with a certain degree of, and let's be honest, dispassionate anxiety. So you bucked the trend, calculated risk. Why were so many of these people, and again, I'm not trying to make it political, so do excuse me, but my curiosity is getting the better of me. Why were so many of the economic, the luminati, if you want to call them that, pushing you to spend?
Rahul, just because every other country had the fiscal space to give large doses of, support packages, it's not necessary that it was not necessary. I think it was what was critical for India was to set its macroeconomic fundamentals right. It had to make itself, in the long run of India, to sustain its growth over the next 2 to 3 decades. It needs to make itself a very easy and a simple country for wealth creation, and that requires reform. It needed to drive its innovation ecosystem. It needs to enhance its productivity. It needed to put in investment in digital, physical, and social infrastructure. And it had to, sustain and then accelerate growth on the back of structural reforms in key areas. So that's what the government has done. It's tried to put its fundamentals right. It's tried to push its structural reforms right. And all this is really going to pay us dividend in the long run. And I think what is important is that we need to really drive capital expenditure cycle. And this will give us long-term results, because unless and until capex ratios are rising over a period of time, we need to see employment and growth in that perspective of capital expenditure. And that is what is important. And that is why Morgan Stanley, in its latest report, has said that India's capex to GDP ratio is expected to rise by 6 percentage points between 21 and 26. And this cycle will be reminiscent of the capex cycle between 2003 and 2007, where the economy grew at a substantial rate. And all signs are pointing towards an increase in investments in the Indian economy, and that is important. I would also say that the government has carried out very major structural reforms, and the new Gati Shakti program actually would mark a very paradigm shift to break the silos of departmentalism. It'll bring synergy to create a world-class seamless multimodal transport network in India. We pushed a 6 lakh crore national monetization pipeline. The only objective was that government assets will be better managed by the private sector. It taps private sector efficiencies in operations and management of infrastructure. And now that we are creating the National Asset Reconstruction Company, which will aggregate NPAs in banks, balance sheet, and manage and dispose them of professionally, this will incentivize quicker action in resolving stressed assets, thereby helping in better value realization. I think we are on track for everything. I have only 2 issues which I think are a challenge, which are beyond the national boundaries. One is the challenge of a global shortage of chips, which is hampering production in the automobile sector, which is a source of worry because of lack of adequate supply of chips. And the other issue, which is a potential, which could be a potential risk, but we have to take it head on, is the rising oil prices, which have the potential
I'm going to come to
impact
that.
our recovery in a very big way.
Yes.
But as far as the country is concerned, we've got our act together. We've taken all the right policy measures. We've pushed for structural reforms.
Clearly, Mr. Kant is very, very optimistic, euphoric, I might say. But Surjit, Bhalla, look, let's just rewind a little bit. I want to persist down that track a little bit more with you. Mr. Bhalla, a lot of people said India was a cruel state that had betrayed its poorest, and that there are in fact many who still say that the unseen, unheard are worse off, and that is the real undocumented threat to the economy, long term. Now, what do you make of this? Because, look, I mean, there is a lot of data, but there is also a lot of missing data on, the unorganized sector, etc. And is there a way that we can ascertain whether they are recovering, they're back on their feet?
Critics will be critics because they want to be critics and they want to state something negative. I have always, as you know, whether in your program or in my article, stressed on what is the evidence. And the evidence is really quite strong about the bottom half, about the bottom 2/3 of the population. That's what we are concerned about. And that is very, very robust. So there is the employment data, the payroll data is coming out, there is a PLFS data. So to argue that we really are not informed and we don't have enough data is, I don't know what data we don't have today that we had before, except for the consumption survey of 2017-18. Incidentally, that survey was, as history has proven, was so bad that maybe, though I've argued for its release, maybe it's just as well that it wasn't released, because what the international community does is take that data as rubber stamping authenticity, when I think that was way, way off the trajectory. And maybe another show we can discuss as to why it was so off the trajectory. But coming back, you look at employment and the recovery. Look, the COVID shock, basically, I was quite amazed by the reaction of the critics, for lack of a better word, that this shock hit the entire world. And everybody was, if you will, not decimated, but hurt. And somehow the other, that there were people portraying that this was a fault of policy. I don't know how it was a fault of policy. And if you want to look at policy, let's talk vaccinations. Another profound achievement of India. They said we couldn't do it, this, that, whatever. And now we've crossed 1 billion jabs. So, if you look at, and financial inclusion is the other social sector that we don't talk about. And yet another social sector we don't talk about is education. There is now complete parity, okay, in the educational levels between girls and boys across the entire spectrum, primary, secondary, tertiary. Indeed, there are more women in college today than there are men.
Parity.
So, that's what really matters. That's the investment. Amitabh was talking about investment, physical investment, and I think, we are going to get to 35, 36% very soon in the next 3 years, and that is our previous record. So if you look at physical investment, structural reforms, human capital investment, financial inclusion across the board, this is a remarkable feature that we did reforms, continue to do reforms. We were hit by, as Arvind said, we were hit by a supply shock, a huge supply shock across the world. And therefore, I think, I would like to know which indicator is suggesting that we are not performing as well as other countries and we are not performing the best in our recovery. So I think we have a lot to be proud of. for this Diwali. And I think the future really on the trends, all of us on the program and elsewhere are looking at leading indicators, no matter what indicator you look at. This is, the coming out of India. Finally, I've been saying for 3 decades, this is India's decade, this is India's decade. Well, this time, 21 to 31 is India's decade. So I will stop there, but it is. So don't ask me about critics, because I think they may have another agenda. And we are not talking about what the agenda is, we are talking about the economy. And the economy is exceedingly robust and very well managed. And I think, we should be proud of what we have achieved and congratulate the government on its achievement.
Well, I'll of course come out to Mr. Kant again, but before that, Mr. Panagariya, to raise this edifice of this financial inclusion architecture, we've had to make a lot of investments, and they've cost. And some of the burden has been passed on to the taxpayer, etc. There's also been, of course, spending, though it's been targeted spending. Now, Mr. Panagariya, Mr. Kant talked about one of the challenges, which was inflation. Now, in India, there's a huge debate. Oil prices are obviously playing a bit truant now with all major economies. And here we have a huge cess at both state and central level being, injected, which is causing a little bit of heartburn. Now, I want to get into this because there will be inflationary pressures. On top of that, you have stresses that are obviously eating into people's savings, etc. Do you see this as another spiral that might come to hit us in the face at some point?
Personally, I don't think so. This is like looking into the crystal ball. But we have not had that kind of history. Remember that oil is only one of the items in the inflation index. There are plenty of others. And food, to me, is the most important one. And we want to keep food inflation low, because that's what hurts and hits the poor most directly. On oil, by the way, this is not a new situation. This is not the first time we have faced rising prices of oil. There have been many past episodes, and we have gotten over those, growing steadily. So I personally don't think, that this is going to spiral. Plus, also don't forget that, both the fiscal and monetary policy have been extremely responsible. Actually, to my pleasure, I should say that the central bank, the Reserve Bank of India, has become a little bit more tolerant of inflation than under previous governors, which I think was required. In a growing economy, you can't really, want to keep the inflation rate to 3% or something like that. Even the mandate is 4% plus minus 2. But previously, it used to be interpreted as 4% or less. But I think you got the flexibility up to about 6%, and that's perfectly sensible flexibility that we have provided, and we ought to keep that. So I think the monetary policy will come in if inflation threatens.
Okay, I think Mr. Bhalla wants to come in. He's raising his hands before I get across to Mr. Kant. Yes.
I wanted to come in on inflation. We have got, and I've done a fair amount of analysis, etc., on this, that basically the weighting structure of inflation in India is very, very outdated and does not represent the consumption patterns of today's India. Rather, it represents the consumption pattern in 2011. So that's a decade-old consumption pattern. And if you look at the personal consumption deflator, which is what is used in the US, etc., our inflation has been very well contained over the entire decade.
Okay, so let me bring in Mr. Kant here. This is an important point. And Mr. Kant, there is talk that the economic recovery is not even, that it's unequal. So I'm asking you, how widespread is the economic resurgence? Does it cover all sectors, or is there some, or maybe more sectors that are behind the curve here?
I look at data and high frequency data. And if you look at data based on this vast amount of vaccination that we have seen, the PMI is in an expansionary zone. The inflationary pressures are easing in the economy now. The GSTs are at an all-time high. The exports are high. The foreign direct investment is high. The residential real estate is showing signs of demand rising. As we continue to vaccinate more people, urban demand and services will rise,
right,
boosting employment and growth. And I also find that access to credit is increasing, and digital payments data, the UPI data has just come in, shows 100 billion target for achievement for the first time. That corroborates the fact that there has been a definite upturn in demand. And rural demand is also picking up following a good monsoon. This bodes well for the Rabi crop as well, owing to better soil moisture level and reservoir recharge. The outlook for rural demand is overall positive. But, more than that, Rahul, I really feel that, the important thing is that this particular year, we've had great amount of financial inclusion. What we've achieved in financial inclusion is nothing other than just being inspirational. And whether it was through the India stack, whether it is through the UPI, and what we've achieved through digitization and technology. And more important than that is the fact that this particular year, in the first 8-9 months, we've had 34 of our startups turning unicorn, and Indians supporting them. The amount of money Indians are putting into IPOs and in young startups shows that they are contributing, the Indian economy is contributing to the growth of the Indian startup movement. And this in the long run really bodes well for both investment, for innovation, for boosting capability in really cutting edge areas, and also capability in our manufacturing sector. And the other big thing I would say is the determination of the government to push through tough reforms, including the asset monetization, and its demonstration that it is politically committed to disinvestment by privatizing Air India. And it will further accelerate the pace of disinvestment now.
Okay, that's interesting. Now, what do we make? What do we make of all these indices, Mr. Bhalla and Mr. Panagariya? Let me come out to you. Look, there's a lot of data here. Now, there was data available earlier too, as you've suggested, that showed that India was sort of on the make. But before COVID, we saw, unfortunately, disappointing numbers. So what has changed between these 2.5 years, despite this black swan event? Now, is it only reforms, or is there something else?
No, I think it's not just one is the reforms, it's the determination of the government to set the fundamentals right, push for huge investment in infrastructure, push for the innovation ecosystem, ensure that we keep driving the digital and the social infrastructure, ensure that we take care of the poor people or those who have gone back to rural areas during the COVID crisis by supporting 80 crore people with ration and through a very strong MNREGA movement, and also really push for structural reforms in a very big way. And therefore, the determination of both the government to ensure that the economy goes back to high growth trajectory and that investments level rise, private sector puts in money, that demand takes a boost.
Okay, so this is interesting. Yes, Mr. Bhalla, I wanted to come out to you. Look, we're seeing these numbers, but there are also, as I was saying, other people who are suggesting that, for example, the CMI, latest data from CMI suggests that the rate of unemployment rose to 7.75% in October from a 3-month low of 6.86% in September. Now, what should we make of this reversal in the declining unemployment trend? Is it, limited to just, is it episodic? Or is this, are we risking the witness of yet another phase of jobless growth? I mean, that's the question I want to get at.
Yeah. So there are two questions. Your first question was, why were we slowing down prior to the pandemic? And I think that is an important question. We did slow down. And I think all the evidence available suggests that very tight monetary policy, unusually tight monetary policy, was responsible. We are the highest real rates in the world, real short-term policy rates in the world. And I think, for people to argue that the cost of capital does not matter is, I think, barking up the wrong tree. So one of the major achievements of Governor Shaktikant Das, etc., and the MPC was to bring real rates back to where they belong, which is historically in the rest of the world, etc., real policy rates, given the international environment that we faced then, should have been close to 0%. And they were 2.5%, 3%. So that explains why we were growing at a lower rate in that pre-pandemic period. If we had proper policy rates, and as you know, on your program and others have consistently argued that really policy rates and interest rates are one of the most important determinants of growth. And we are beginning to see that effect. That has been one of the major achievements in the post-2019 period. And through the pandemic, I think monetary policy was extremely positive, and we are beginning to see the fruits of that. Okay. The second question was, sorry,
about this joblessness that is dropped to 7.38%.
The CMI data, has, as I've commented on earlier, and there is now, I'm finishing a piece of research that in terms of their employment data, and it turns out that they are way, way off base in particular about female employment, unemployment, and female employment, which they show is something like 10%, 11%, given all the data and the PLFS data. So we have two pieces of data that show that the CMI data on employment is completely off base. First is the PLFS data, which is done every year. And the data at the time, the pre-pandemic, they were showing 11%, and the female employment rate, according to the PLFS data, was 25%. So, nowhere in the world do you have such a discrepancy between the official data and the local private data as in CMI. So there are also severe problems with their consumption data, and perhaps that's for another occasion. But basically, the simple point to be made here is that we cannot take, when we have the PLFS data, which is the equivalent of the NSSO data it was called NSSO data previously, then let's look at that. Then there is one other point I want to make on employment. There's a time use survey, and one of which came out in 2019, before the pandemic.
Right.
And, if you look at the female employment there, in the rest of the world, it's considered to be 1 hour. Did you work 1 hour previous week? In India, we have a complicated system of usual status and principal status, etc. But if you convert the annual data, the time use data in 2019 to 1 hour, it turns out that the female labor force participation rate is somewhere in the mid-30s, not 25, but about 10%, at least 10 percentage points higher. So, that's a data issue. Point being, everything is consistent with all the data coming out, is consistent with both a robust recovery going forward, and there is an explanation, as I gave before, about why our growth rate, I'm not questioning the growth rate at all, prior to the pandemic, And that, I think, was primarily the fault, if you will, of a very severe and unjustified monetary policy.
Okay, so look, I'm going to now take this a little forward with Mr. Kant, but also come back to Mr. Panagariya. Now, you talked about, Mr. Kant, financial inclusion and how broad-based, and inclusive this recovery has been. But Mr. Panagariya, I want to talk to you about a few numbers. The government allocation of MNREGA in the current fiscal year is about 34% less than the revised budget of the last financial year, 2020-21, and therefore not adequate. That's what a lot of people are saying. Would you agree that the inadequate allocation could have had a detrimental effect on stimulating rural demand for jobs? Also, according to the report that we have right here in front of us, the people employed under the scheme are not getting paid on time. Considering the scheme employs daily wage laborers, don't you think a delay in payment for even a single day's work will discourage labor to seek jobs under the scheme? Third, the report states that in March 2021, the central government asked states to send 3 bills, one each for MNREGA workers belonging to SC, and the other for ST and other categories, instead of just one MNREGA payments, as was the norm. Now, could you tell us why the practice was introduced and how it stands to benefit employment under the national scheme? That question will go, of course, to Mr. Kant, but the first two to you, Mr. Panagariya.
Well, look, to my knowledge, at least for the data that I have seen during the COVID crisis, MNREGA has actually taken on to a very large proportion of the employment, and a lot of the in rural areas, and the PLFS showed, for example, that the agricultural workforce had expanded from something like 42% to 46%. A lot of that contribution was that of MNREGA. Now, if the allocation is lower, I think we ought to raise it. Also, if there are any of these administrative issues, I don't go into those details, and so I do not know. But these are matters that can be sorted out administratively, and perhaps Mr. Kant can.
So, Mr. Kant, let me bring you in on that point.
So let me just assure you that there will be no shortage of resources for MNREGA. Allocations are made at the BE stage when there is increased demand for that particular scheme, particularly for schemes in the rural development area, and especially MNREGA. Increased allocations are increased at the RE stage. And there has never been a shortage of resources for MNREGA, and I can assure you on behalf of the government that we'll make adequate provision and there'll be no shortage of resources for MNREGA. We'll take care of all the demand. Having said that, I must say that it's very important to ensure that people get back to their jobs. And during the COVID period, people have gone to rural areas. People are now, the workers, the informal workers, the gig workers are moving back to urban areas, back to their work. And I think it's important to restore normalcy. If manufacturing has to go up, if PMI has to increase, if essentially India has to drive its growth on the back of manufacturing, and if exports have to grow, we need workers in manufacturing factories. And therefore, industrialization, urbanization, factory manufacturing really holds the key to India's sustained growth over a long period of time. And that is, to my mind, really critical. We must get this basic fundamental right that we need to create good quality jobs in India, which will only come from manufacturing and exports.
Okay, so if it's all looking so positive, Mr. Bhalla, both RBI and IMF slashed their projected growth rate for the Indian economy. Further, we've had former RBI Governor Raghuram Rajan, who said that our belief in the economic future has diminished. The pandemic toll has further diminished our self-belief, even further while pushing many in the middle class into poverty. Now, how do you view this lack of optimism? This sort of, we can say that, okay, these people are sort of, they've got their agenda, maybe they're naysayers, but look, some of them do speak with the benefit of data. Now, how do you account for this?
No, look, let me come
Mr. Bhalla,
to that point.
Yeah.
I have seen Raghu's statement, and I was looking for some reference to data where he said that a lot of the middle class has been driven into poverty. And, if you have that data, anybody else has it, please send it to me. I do not know what data he's referring to. He possibly is referring to the CMI data, and the CMI data is not publicly available, so I can't even cross-check the CMI data. So I think that is problematical. I would like to see the data. We should all look at the data if it exists and if it is if correctly representative. I just mentioned to you as to how the labor force data is completely not representative.
Yes.
One other aspect of the CMI data is that they have the illiteracy rate in that data is close to zero, when the actual data, according to PLFS, is close to about 20%. This is the entire population, not the young population. So let's talk data. I would love to do it, but I'm afraid some of the people make comments and assertions without any documentation whatsoever. Now coming to the RBI and IMF forecasts. As I've always stated, that one of the lessons I learned about forecasting was that forecast often and always remind people when you're right. Now, it turns out that there has been detailed analysis within the IMF of its forecasting record, and by the IMF and by the IEO, which is a unit of the IMF, and which shows that actually the IMF has got a rather disastrous record in forecasting. On the RBI's case, maybe at that time, remember the forecast was made with the anticipation or expectation
That's true.
of a third wave.
Yes.
And we haven't talked enough about how that likelihood of a third wave has really declined based on all the available evidence, especially the seroprevalence data, which shows that maybe it's more than 80% of all India has antibodies, and the vaccination rate. So you add the two together. So I think the RBI may have been a bit conservative given the data at that time.
Okay, let's get in Mr. Kant on this point. That's an important point. Mr. Kant, the possibility of a third wave, and I'll come out to Mr. Panagariya last and wrap this up. Mr. Kant, the third wave. Now, it remains the elephant in the room, so to speak, because we've just opened up. We're expanding even more. Activities are going back to normal. Now, where do you see this third wave? And what's the calculation in the government's own mind?
So let me first say, Rahul, that we've speeded up the process of vaccination in a very big way. We've achieved, as you're aware, 100 billion doses.
True.
But the government is continuing the pace and, it's accelerating it even further. And we are very determined to ensure that this present speed of vaccination will enable us to overcome the third wave. We are quite determined to see that we do not face the third wave. But having said that, it's very, whether we have a third wave or not, is not merely a function of vaccination, but it's also a function of the kind of discipline which citizens in the country do. You can't leave it to the government. The people have to collaborate with the government to ensure that they wear their masks, they are disciplined, they do not crowd around on the back of Indian festivals. And therefore, everything is dependent on good behavior by the citizens of India. And on that will depend the third wave. The government has done its best. The government has put all its resources, all its energy, all its dynamism in ensuring that everybody gets vaccination. Now it's for the people of India to show that they can, that they are disciplined. That's very important. But I want to get back to this other issue about what others have said about the Indian economy. And it's important to look at what leading institutions have said. And IMF in its, they have projected India to grow at 9.5% this year in 21-22. Even for fiscal year 22-23, they have projected a growth rate of 8.5%, indicating that the economic recovery is not going to be short-lived. If you were to look at others like, say, Morgan Stanley, they have also said that India's capex to GDP ratio will rise and that India will grow at accelerated pace, and so has CRISIL in its recent report. It has in fact said that it will drive both employment and growth. So we should look at what institutions are saying, what their data scientists, what their analysis shows. And if you look at good analysis by different economists from across the world, by different institutions from across the world, including IMF, India is well on its path to very speedy and accelerated recovery.
Mr. Panagariya, lastly to you, what are the key concerns and challenges that remain?
Well, since you've given me disproportionately less time, Rahul, I just want to make a few concluding comments of my own as well.
No, please carry on.
So first of all,
let us try to rectify that. Please go ahead. That was not the intention. I think we just got caught in a crosstalk.
I understand.
Yes.
I understand.
Please go ahead.
So first of all, about the critics, when Finance Minister Nirmala Sitharaman spoke at Harvard University recently, Larry Summers asked her some question about the critics. And she said, look, if somebody is asleep, I can try to wake him up. But if somebody is pretending to be asleep, there's not very much I can do about it. I must say, this applies to lots and lots of critics in India. When all the indicators are saying that things are actually looking up, when you say that there is confidence in India is suddenly fallen, that stretches the imagination. How come the foreign investors are continuing to come and actually at an accelerated pace? There is a 10% increase in the FDI even during the COVID year. So that one part needs to be taken with great bit of skepticism. Now, for the future, looking ahead, and I want to talk this more medium to long run. Some of the very key reforms that have been done, their benefit has still not been realized. And these are all reforms which actually reinforce each other. Four in particular I want to mention, since nobody has mentioned those: labor law reforms, the corporate profit tax reform, the insolvency and bankruptcy code, and finally the GST. Four of these reforms, these are like the 1991 reforms. When we ended licensing, we opened up to foreign investment, we opened to trade. All these reforms, four of these reforms that I've mentioned are self-reinforcing. Adding to that is digitization and build up to infrastructure. And the speed that the government is now going at currently, it really reminds me of some of the Vajpayee years. The speed of the government in almost all aspects has more than caught up actually with what we saw during the Vajpayee years. So I really think that we are very much on the roll. Going forward, we are going to grow 7 to 8% at least. I hope we can do something on the trade front. The government has said that it is going to now, aggressively negotiate free trade agreements with large countries, including the European Union. I hope we do that. I think that will actually, if we do that, that will push us into about 10% range. Now, to your question, what could go wrong? I still think that the main threat we still face is that of COVID. And I think something needs to be done in the financial sector. The public sector banks are not lending. The credit growth is still very low. And that's something that needs to pick up. And in that area, a lot of reforms. My favorite is we privatize the bulk of the public sector banks rapidly, but something needs to be done there. Private sector banks are lending, they're about 9 to 10%, the credit expansion, but public sector banks are only still at 3-4%, the latest number that I've seen. So that's where I would be, as long as we ensure through vaccination that COVID is kept under control. So otherwise, I don't see any reason to be pessimist.
Well, this has been a wonderful discussion. And at least we can say with some confidence that Diwali is dispelling some of the gloom. And I hope that the trend continues. Thank you, gentlemen. Thank you for joining us, Mr. Kant, Mr. Bhalla, and Mr. Panagariya. It's been an illuminating conversation, pun intended. I'll leave it at that.